Hello and welcome to London Educators. At your back, you can see an accounting lecture. This is your expert teacher, Mr. Ilias, and you're doing coffee class with Ilias. That's a good rhyme. Already Claire and few more students are in the queue. Many students are joining in. Welcome to my accounting class. Within 10 to 15 minutes, we're gonna finish lots of accounting. Okay, so if you can hear me clearly and see me, can you please confirm me? A very good morning to everybody. You can write back to me on chatting option that you can hear me. Do you? Just need, yes, I can hear you. Thank you. Thanks for the confirmation. Yeah. Yeah, good morning, sir. I can hear you. Thank you. From Essex University. What's your full name? The name is MA22047. Welcome. Well, let's not waste any time, straight into the point. Today, another exciting day. Saturday is our financial accounting. Muhammad Salisu Akbari. Muhammad, welcome. Yeah, okay, Muhammad. Yeah, you're a regular student, a good student. Very welcome. So you're studying at Essex. Brilliant. So you can see in front of you, world-class BPP course materials are here for ACCA. This is FA Financial Accounting. And this is, we used to call it F3 before, these days FA or FFA if you're studying with foundation accounting. Equally important, the chapter today we're going to do from this book is, I believe, one of the chapter 8. Yeah, chapter 8. Tangible non-current asset, very important for any accounting students, whether doing AAT, ACCA, CIMA, even A-levels, O-levels, GCSEs, IGCSEs, very important, isn't it? Yeah, tangible. What do you mean by tangible? You can touch it. For example, this is a phone, you can touch it. Tangible, isn't it? Yeah, assets. So in this chapter, today's lesson, although 10-15 minutes, it's going to be 15 minutes, it's a bit longer. Quite a few things we're going to learn. Think about, like, we're going to talk about revenue expenditure, capital expenditure. That's a big part itself. Assets, we're going to talk about it. The biggest thing we're going to talk is today is a depreciation. Yeah, so bear with me. Let's get into the chapter. Are you ready to get started? Yeah, ready to start. Let me know. Yeah, show me some like spirit, like you're ready to rock and roll. Who says it? Who writes it to me? Come on, write it to me. Let's go. Brilliant. Claire, Muhammad says yes. Yeah, brilliant. I'm going to mute all of you, and anytime you can unmute and talk. Let's get into it. Yeah, tangible non-current asset. You know, in this particular chapter, I'm going to ask you quite a few questions which are going to be basic. Give me some examples of tangible non-current asset. Write it to me or let me know. These are the things we're going to talk about: capex and revex, capital expenditure, revenue expenditure, depreciation methods, and a bit of accounting. Yeah. And yeah, there is a disposal, a big part. I will show you some other videos at the end of the lecture, so you can study at home. Free videos from accounting lecture and London Educators. So give me some examples. Come on. Yeah, machinery, plant. Well done. Non-current asset. These are your non-current assets. Now, you see, I showed you the mobile phone or the laptop you're using or any other non-current asset. Buildings. Thank you. Those of you are giving me answers. Building, machinery. These are right answers. Yeah. So all the non-current asset, it has a useful life, and over the lifetime it gets older. That's why the value goes down, isn't it? Oh, after 1 year, 2 years. That's why we do depreciation. That's the main part of our today's lecture. So sip on your coffee and enjoy. So examples of tangible non-current asset, you are right. Building. Then you said machine and plant and machine, P&M we call it, plant and machinery, fixtures and fittings, isn't it? Yeah, equipment, so on. So you can go on and on. Now, assets, we're going to recognize cost or revaluation method. We will go through this later on. Here is another activity for you based on capital expenditure, capex, and revenue expenditure. Giving you a little idea, I have fantastic videos. Look at this. Only 6 minutes video, 5 years ago, I uploaded this one. So on CapEx and revenue expenditure, little bit idea. Money you spend on non-current asset, also improving the non-current asset is called capital expenditure. Like you bought non-current fixed assets, capital expenditure, makes sense? And revenue expenditure is a day-to-day expenses, make sense? Yeah, like you're paying rent and rates and insurance, repair. Yeah, a little more. I'm going a little more. You bought a non-current asset. For example, you said plant and machinery or equipment. You bought a, let's assume the heating system you bought it, yeah? So the lorry man or the person who brought it in, the delivery cost is also part of the capital expenditure. Initial installation is also part of capital expenditure. You bought a house or land or building, and the lawyer associated with it, you paid some professional fees like valuation, chartered accountant, actuarial, or lawyer fees. That's also capital expenditure. Okay, and revenue expenditure, I already told you. So if this knowledge is sharpened with that much of knowledge, only 2 minutes video, you can rewind the video and check it out. Let's see some capital and revenue expenditure. I'm gonna go, you just write C or R. C means capital, R means revenue. First one, purchase of property, capital or revenue? Come on, write it to me. C, R, come on, I got a mixed answer. You purchase a property. This is, yeah, good. Capital expenditure, brilliant. Annual depreciation of the property. Is it capital or is it's a regular day-to-day expenses? Revenue, well done. Revenue, brilliant. Revenue, brilliant. Thank you for your prompt answer. Many of you answering. Solicitor fee. Ooh, connection to purchase of a property. Did you remember what have I said? Solicitor fee. Aha, good, good. Those of you are saying capital, yeah, it's a professional legal fee, solicitor fee, capital expenditure. The cost of adding extra storage capacity to computer used by the business. That's an interesting question. Yeah, it's just a hard drive. You bought a hard drive, extra storage, computer is anyway capital expenditure. But what do you think this hard drive? Think about it. Is it going to give a benefit over the years and years? Are you going to hold it? Yeah, that's correct. Capital expenditure. Brilliant. It's not a day-to-day expenses, isn't it? Yeah. Brilliant, brilliant. Good job. Computer repair and maintenance. What do you think? Who writes it? Computer repair. Yes. Revenue expenditure. Brilliant. Profit on sale of, that's a disposal, isn't it? You sold some office building. This is neither capital expenditure nor revenue expenditure. This is a capital income. Disposal income, you can say. Okay, that's I'm helping you, or asset income, disposal income. Revenue from sales. This is neither expenses, yeah, it's an income again, but this is not from asset, it's a revenue income. Make sense? Am I understood? Revenue income. Okay, 2, I helped you. Rest you. The cost of new plant. What do you think? Come on, easy peasy lemon squeezy. Yeah, it is capital expenditure. Customs duty charge on the plant when imported into the country. Interesting one, isn't it? Yeah. Yeah, good writing. People are already saying it's a capital expenditure. Yeah, that is charged with your non-current asset. Yeah, customs duty, you can't get rid of it. You can't get it back from anyone else. So, yeah, you import it. That's the cost of your asset. Carriage cost. I don't want to read anything that the carrying cost itself, but it's still better to read. Transporting the new plant, factory premises, Right answer. All of you said capital expenditure. Right answer. Cost of installing. You get your answer anyway, but still let's read the premises, blah, blah. Installation cost. Do you remember? Yeah, right. Capital expenditure. Last one, wages, salary, wages, or whatever like that. Yeah, to operator. Yeah, right. Well done. Mohammed, Claire. Then who is this one? 1x3TUA. The name is, Zoom names are sometimes very unusual, isn't it? What's its full name? That's revenue anyway. Fine. Well done. Do you want to see the answers? Have a look. Here is your answer. You can take a screenshot later on. That's your answer. Brilliant. Let's go to the next part of this chapter, which is basically property, plant, and equipment. These are non-current asset. I'd like to go through this another activity with you quickly. Yeah, they said they give you cost of a machine you bought it. There is a delivery cost. There is a maintenance cost. There's an installation cost. how much it should be capitalized? No doubt this should be capitalized, the cost of the machine. Delivery should be, shouldn't it? A maintenance, do you? No, you don't. That's a revenue expenditure. Installation you do. So 20,200, 500, 20,700. Do you agree? Nice and easy. Yeah, I'm going a little faster, I know, but I hope it's not that difficult, deep detail. Yeah, it's nice and easy. Oh, there is an option. This is the answer. Most of your exams these days are computer-based, whether you're doing ACCA, AAT, computer-based, you just take and get your answer. Now, today's best topic. Already I've taken almost 10 minutes, 5-6 more minutes in this lesson. Yeah, my coffee is already cold. Okay, depreciation, fall in the value of non-current asset. Many students can't write it. You know, I'm an examiner from Edexcel Pearson. I've been marking, but they can't write it. Come on, write it down. Yeah, fall in the value of. You can say systematic allocation of over the asset's life, but fall in the value of non-current asset. Write it and get your answer. There are two types of depreciation popularly used in today's world. One is a straight line method. Another one is diminishing or reducing balance method. There is a revaluation method for small kids like GCSEs, even in A levels, which is all right. So a look at this. Here is a straight line method depreciation on my YouTube channel. You can take help from here. A bit of disposal and depreciation at the top, and even at the bottom. So you can always take help from my other YouTube channel videos. Let's go over that now. Why do we do depreciation? The decrease in the value of non-current asset over the period of, decrease or fall in the value. Yeah, that's correct. Wow, there are more answers like the usage, physical wear and tear. It becomes older, isn't it? Obsolescence, out of fashion. Obsolescence means out of fashion. Think about the so many things are out of fashion these days, like walkie-talkie. Used to be in London Underground, we used to see people put the headphones on it, and walkie-talkie, you know, or CD cassettes. Those disappeared, obsoleted. Yeah. Legal or limits of your use of the assets, like you get the 5 years or 10 years license to use it. So that's how we depreciate over the period of time. The value of your non-current asset goes down. Now, the two methods straight away. Straight line method. The formula is cost minus residual value divided by number of years. Cost, the item you bought for. Let's assume you bought the item for £2,500. Residual value means after useful life. What is the useful life? Let's assume you're going to use it for 3 years. Yeah, that's your useful life. After 3 years, how much you can sell it for? We can sell it for £250. That's called residual value or salvage value or sellable value. Different name. Okay, so if this is the formula, what is the answer of this question? Who gives me the answer? Cost is 2,500 minus residual value 250 divided by 3. Where is my digital calculator? You calculate, come on. Yeah, come on, don't be lazy. Okay, I got some answer. 350 divided by 750, sorry. That's the right answer. 750. Do you remember? This is straight line depreciation. Every year is the same depreciation. Okay, so here is the pro forma given. Cost is 2,500. Accumulated. Accumulated means this year, last year, year before, all year depreciation is accumulated together. It's called accumulated or provision for depreciation. So 750. And you minus it from here. How much is the carrying amount? Carrying amount. Again, what is the meaning of carrying amount? You're learning so many accounting in 15 minutes, isn't it? 2,500 minus 750. Cost minus accumulated depre, you get carrying amount. 1,750. Thank you, Claire. That's it. You know, the cost remains cost. There's a concept, cost concept. Every year it should be 2,500. But accumulated, like, in straight line, depreciation is 750 every year. That's an expense. Please do write it down or remember in the income statement, that's an expense. But this is a balance sheet, statement of financial position. This pro forma is in the balance sheet. In the balance sheet, accumulative means last year plus this year. 750 plus 750 this year too, in year 2. Yeah. So it becomes 1,500. Thank you. 1,500. When you minus 1,500 from 2,500, I know that mental math I can do. 1,500 remaining, isn't it? Yeah. Say 1,000, 1,500, yeah. Hold on, come on. 1,000 remaining, isn't it? 1,500 you take away, yeah. 750 plus 750 makes 1,500 accumulated depre, yeah. 1,500 you take away from your cost. 2,500. How much is your carrying amount? 1,000. Make sense? Yeah, brilliant. And likewise, you do the next one. The last topic for today, reducing balance, diminishing balance. Only difference in the formula. You charge the percentage. There will be a percentage, 10%, 5%, or 15%. You do the percentage on carrying amount. And what is the carrying amount? Cost minus accumulated depre. For example, they gave an example, 6,000 and depreciation is 40%. So 6,000 is first year carrying amount and cost is same. You do 40%. If you do 40% here, get your depreciation 40%. Claire is already writing to me. Is it 2,400? Can you confirm me, everybody? And accumulated first year is the same thing, 2,400. Let me see, double check, times by 40%. Brilliant, 2,400 is right answer. And that is your depreciation for the year. 3,600 is your closing carrying amount. Now in year 2, do you do on 6,000? No, that's the straight line method depreciation. Like, do you again times on 40%, do you times on 6,000? You do on carrying amount, don't you? You do on carrying amount. What is the carrying amount? 3,600. Claire has given me already the answer, times by 0.4. 1,440 is right answer. 1,440. Guys, that's expense, that's charged into the income statement, but in the balance sheet, accumulated is last year plus this year. That gives you accumulated for this year. So last year, or depre was 2,400. This year, 1,440. How much it is? 3,840. And that should be taken away from the cost. Yeah, slightly deeper to get your carrying amount. Let's see our both of the answer for activity 4 and 5. Here we go. Activity 3, yeah, we got it right. Activity 4, yeah, we got it right this way. This was you meant to do. I believe you done it right. Here we go. Well done. That's how you do, and rest you do this way. Guys, I think that's our 15 minutes for today. We have a little bit more remaining in this chapter, which is how to calculate the depreciation, especially the disposal. So once we do these 2 things, this chapter is revision done and finished. The chapter is, here we go, on the screen. Chapter summary means chapter finish. Where do you get those videos? Disposal is here already at the top. More disposal. Yeah. Well, I think that's all for today. What's your thought? You can say thank you, Ilias. You can write, you can say it, and we can say goodbye. Tomorrow is our management accounting day. Okay, you're welcome. People are writing. It's a goodbye then today. Hope you will engage with London educators and accounting lecture. See you guys. Bye-bye.